Good morning. Happy Tuesday. Today is September 2nd, 2025, and this is your Tuesday holiday week market update. Now, normally, of course, we do this on Monday, but with markets closed for Labor Day, we're picking it up today and looking back on what was a full 5-day trading week last week. So let's jump in. The week kicked off with a pause after Friday's big rally. Yields crept higher as German business sentiment surprised to the upside, and that spilled into the U.S. markets. At home, new home sales were stronger than expected, which kept upward pressure on rates. Stocks opened lower, never really found their footing. The big headline wasn't economic, it was political. President Trump renewed threats of tariffs on China's rare earth supply. That, combined with ongoing chatter about Fed independence, left markets uneasy. By the close, the Dow was down about 0.75%, S&P off nearly 0.5%, and the Nasdaq was lower by about 0.25%. Tuesday flipped the script. The day started with fireworks. Trump attempted to fire Fed Governor Lisa Cook, an unprecedented move that raised all kinds of legal and constitutional questions. Markets, though, looked through that. Traders judged it wouldn't affect any near-term Fed policy. On the data side, durable goods fell 2.8%, but the core measure of business spending actually rose more than expected. Housing prices growth slowed, which helped ease inflation concerns. Consumer confidence came in a touch softer, but not enough to derail sentiment. The result, it was a rebound. By the close, the Dow was up 1/3%, S&P higher, but by almost 0.5%, and the Nasdaq was up 0.5%. By midweek, the market was in a holding pattern. All eyes were on NVIDIA's earnings after the close. The day itself was quiet. Stocks opened with small losses, then methodically chopped higher during the day. Energy led the way, thanks to gains in oil and nat gas. Software names like Salesforce and Workday also bounced, while small caps outperformed. When the dust all settled, the Dow added 1/3%, S&P up 1/4%, and the Nasdaq up 1/3%. Thursday was all about NVIDIA. The company beat earnings. They beat revenue expectations, but guidance, of course, disappointed. Shares slumped at first, then they turned around after CEO Jensen Huang revealed that he was in talks with the Trump administration to export those AI chips to China in exchange for some profit sharing. That sparked some optimism, and broader tech stabilized. Economic data also helped. Q2 GDP was revised higher to 3.3%, and jobless claims dipped back below 230,000, 229. Growth was holding up, inflation was tame, and Fed cut hopes stayed alive. Markets hit records. S&P 500 crossed 6,500 for the first time. The Dow finished up 0.25%, S&P up 1/3%, and the Nasdaq ended flat on the day. We closed the week with a bit of a fizzle. Core PCE, the Fed's preferred inflation gauge, what everyone was watching for, rose 2.9% in July, right in line with expectations, but mighty close to that 3% and pretty far from that 2% that the Fed wanted. It was also higher than last month and the highest since February. Consumer sentiment ticked higher. Together, the data signaled progress on inflation without derailing growth. All eyes are now back to the labor market. Guess what this week is? Yes, jobs week. So we'll talk about that in a second. Fed independence drama lingered. Governor Cook filed a lawsuit against the Trump administration over her firing attempt. Markets largely shrugged that off. Traders kept their focus on what matters most, the September FOMC meeting. Odds of a rate cut remained above 85% of the cut. If the cut is for the new conversation, basically where we are now on that, how many are going to come this year. Add to that the earnings hangover, the pressure that we already had overall, and the long weekend and the low trade volume. Markets slid into the long weekend. The Dow was down 1/4% for the day. S&P down almost 0.75%. The Nasdaq gave back about 1.25%. By the way, if you watch any of the news, you would have thought it was a bloodbath. That wasn't a bloodbath from what you can see. For the week, the Dow was down 0.11%. The S&P was down 0.08%. And the Nasdaq was down a whole whopping 0.18%. As the last trading day of the month for August, the Dow for the month was up a strong 3%. S&P up 2%. The Nasdaq up 1.5%. So much for a bad August, right? So let's see what September has in the store. Not so great as of right now. The week ahead. Now, looking ahead to this shortened week, there is no shortage of catalysts. Today, ISM manufacturing is expected to bounce back to 50, right on the line between contraction and expansion. Tomorrow, we get the JOLTS job openings report and factory orders. We'll also see the Beige Book release. Again, not watched by many, but it can move markets. Thursday, the ADP jobs report, weekly jobless claims, and ISM services. And Friday, the big one, the August jobs report. Consensus is looking for only 75,000 new payroll jobs. Unemployment edging up to 4.3%, and wages rising to 0.3%. And wages rising by 0.3%. And that 75,000, by the way, is so low. There are concerns that the number can go negative, and that will be news. Maybe bad news is good news. We'll have to see what that looks like. On top of that, Broadcom and Dell report earnings. The Fed heads include Williams and Goolsbee will be back on the speaking circuit as we speak about the Fed, and it seems that's all we will speak about. All the talk and parsing of words and discussing the data all point to September 16th, 17th, the next Fed meeting. So we'll watch all of that closely. So the big picture is this. Last week was all about politics and AI, but markets kept their focus on the Fed and the economy. This week, it's all about the jobs report. Weak number could seal the deal for September rate cut. A stronger than expected print could complicate things. And as I seem to say weekly, the president has been all but quiet, so you never know what catalyst he'll throw in. We will be watching closely. Have a great week.